we are going to do a quick poll just to see who's in the Zoom room with us. So I'll go ahead and launch the first one, and then we'll pass it off to Sima to dive right in. So the first question for you guys is, do you identify as a business? The answers are yes, no, not sure yet. Totally fine if you're unclear. You guys should see a button on the bottom of your screen or a window. It's not letting me vote. That is so weird. Okay, well, with that being said, then we will go ahead. Thank you guys for letting me know. With that being said, we'll just actually dive right in then. Sorry for Zoom technical difficulties. Gotta love it. But I will go ahead and pass it over to Sima to dive in. Sima, so great to have you. Thank you for joining us.
Awesome. Thank you everybody for being here and for being engaged and, being excited to learn about yourself as a business. So first, a little bit about me. I'm Sima, and I am one of the co-founders of Creative Juice. And the reason I started this company was because I care deeply about bringing better financial services to folks that don't have it. I spent 20 years doing this. And when I started learning about creators, I got really excited about the opportunity to help people like yourselves, unlock your passion and do it in a way that you feel comfortable financially doing. We know that health and financial services, like your money, are some of the two biggest impacts to your quality of life. And I wanted to build a better system for being able to manage your money. The reality is today, creators and creatives are not recognized by traditional financial services. So when you're working to transform from content producer and you're doing things like working for yourself, working on graphics or making creative materials, a lot of banks don't see that as actually a career or a business. And I don't think that's right. I think that creative people are businesses and they have the opportunity to, and should have the opportunity to be treated like a business. And over the last 2 years, since we even started this company, we've seen just the creative economy continue to grow. And I believe that more and more people will be able to make a living doing their passion and being creative while also managing their money. And hence Creative Juice. We understand you, we understand that you're working on your passions, and we want to make it easier to be a business. So that's why we're here. And we're going to give you a couple of tips on just exactly how to do that, so that we hope will help you feel really empowered to go run your creative life. And in the spirit of creativity, here's a little bit about us. We're banking made for creators, make it really easy for folks to open up. You're seeing a little bit of an image of our website here. Highly encourage you to check it out along with other content after this. And you can sign up for a newsletter and get more information as well. So with that, we will jump right in. All right. Okay, recap. Creative Juice, we are banking, funding, and business tools built for creatives and in partnership with creatives. The things that we're going to cover here are: 1, just the business of creating; 2, how to save thousands of dollars in taxes; 3, what cash flow is and how to make it more organized so it doesn't feel chaotic and out of control; and 4, a lot of you are probably doing brand deals or working with companies and negotiating, and we wanted to share a couple of tips on how to manage those negotiations. Throughout this whole presentation, if you have questions, as Lizzie mentioned in the beginning, please dump them in the Q&A and we will try to get through them throughout the presentation. All right, the business of creating. I think we purposely use this word business because a lot of folks in the passion arts don't think of themselves as business people. That is so not true. If you are making money doing what you're doing, you are a business person. Give yourself more credit. And it's an amazing gift to be able to combine the passion of creating with the business side of it. So let's start off with a quick video, since you've probably heard enough from me talking already.
So you're in the business of being a creator. Now what? You did it! You're making sweet, sweet money creating for your followers and brands. That means you're officially in the business of being a business. This is the perfect time to focus on how your business can grow. It's decision time. Let's talk sole proprietorship or LLC. Every creator business starts with a person, you, the creator. That person can choose to operate as a sole proprietorship. Say what? A sole proprietorship is a business owned and run by one person, in which there is no legal distinction between you, the owner, and you, the business. Forming a sole proprietorship is about as easy as it gets. To make it legit, you can open a business banking account with Creative Juice. That's it. A sole proprietorship is a walk in the park. However, you may want to create liability protection between your business and your personal assets. This is where an LLC or limited liability corporation comes in handy. An LLC is simpler than a C Corp, and for most creators should do the trick. An LLC can protect your personal assets from business liabilities. Well, that sounds like a no-brainer, doesn't it? Yes. Just keep in mind that LLCs can cost more. There's a setup cost and annual registrations. Don't worry though, these are deductible. If you're separating your personal and business expenses, then filing as an LLC or a sole proprietorship is about the same. The trick is to keep your business in your business account and your personal stuff in your personal account. And no, Venmo and PayPal for your business don't cut it. Sorry, not sorry. So how do you choose? If you're still growing your business, a sole proprietorship may make more sense. If you have personal assets or if you start brand deals or launching products, you may be exposed to more liability, and an LLC may be better for you. It's up to you to decide the best route for you, so you can get back to doing what you do best, creating. Just remember, no matter what, a business banking account is your first step in the right direction. That's where Creative Juice can help. Sign up at getjuice.com.
Okay, I hope that was fun and that you enjoy that. Like, business can be fun, and some really important concepts in here. The first one that I really wanted to introduce was, how do you know that you're a business? So often creatives talk about, it's just a side hustle or it's just a passion, but it's actually more likely than not a business. According to the IRS, a business is an activity carried on for livelihood or in good faith to make a profit. So if you're making money here, and I usually use a benchmark of about 2,000 to 5,000 as the first step, that's meaningful money that you should be thinking about as a business. And if you see a line of sight into making that a profit, you're a business and you should treat yourself like a business. So that's concept number one. If you are doing something that you're actually earning a living off of, or you're kind of have intent to make a profit, you're a business. All right, next concept. We talked about this in the video, LLCs and sole props, and a little bit about the S Corp, which we'll touch on. When you're a business, you have an option as to what type of business structure you want to set up. This can seem really intimidating, but let's unpack it a little bit. The easiest and simplest structure is simply being a sole prop. All you have to literally do is say, I'm a business, and set up a separate business account, and you are now officially a sole prop, and you can be treated as a business by the IRS and any other entity. It's super easy. That's it. There's no paperwork. You don't have to register anywhere, zero cost, but you can only do it by yourself. So if you have a partner, that doesn't work. Sole prop means single owner business. It's my business. And the benefits of saying that you're sole prop and separating your business expenses from your personal expenses is that all of the money that comes in are your business income. All the expenses that you're spending that are related to your business are your business expenses, and it becomes deductible. And you don't need to deal with getting an EIN or anything from the IRS. All you have to do is keep it separate so that when you do file your taxes, you can say this is business income and expenses, this is personal stuff, and make it official that way. The con for being a sole prop is that if you own your house, or if you have a car, or you have a ton of personal assets, if somebody sues you, they can access some of those personal assets. So if you're just starting off and you don't really have much in the way of personal assets, or what you're doing doesn't really expose you to liability, like if you're just creating content and you're not having someone in an office or in a home where they could slip and fall or something, a sole prop probably does the trick. And I highly recommend that you stick with a sole prop as you start off, as opposed to getting intimidated by some of the stuff that comes with an LLC. Okay, let's talk about the LLC structure. This is the simplest corporate structure, an LLC. And the reason you do an LLC is because it creates liability protection around your business activities that are separate from your personal activities. So if you're doing something that's a little bit higher risk, right? Like you're having people over to a space that you're running and they could slip and fall, or if you're serving food and someone could get food poisoning, basically anything that someone might sue you for, you might want to think about getting an LLC. Oftentimes, creators that are starting to do more substantial brand deals and recommending products will put in place an LLC in case someone sues them for that. And I think that's a pretty good litmus test, right, for your exposure. But that liability protection is one of the main reasons to put in place an LLC. An LLC does not make you a legitimate business. You can actually be a legitimate business just as the sole prop. The taxation is passed through, so similar to the sole prop. It's easier to establish than like a bigger corporation. You can be flexible with an LLC, but the cons are that you do end up paying annual registration fees, a setup cost. You've got to file an annual report, and sometimes it can get a little bit complicated and you might want a bookkeeper. So that's kind of the main focus of the LLC. I'll touch on the S Corp really quickly. The main reason to set up an S Corp is you're making more than $80,000 a year in profit. And there are some tax benefits that come with setting up an S Corp that are not worth it unless you're making more than $80,000 a year. $70,000 to $80,000 a year. And once you go the route of the S Corp, it definitely gets more expensive in terms of getting someone to manage it for you. You're looking at probably $5,000 to $10,000 in just admin expenses. So that is something that you should only do if you are going to consistently be making more than $70,000 to $80,000 a year in profit. Okay. Your three main structures. So how do you choose? Again, are you still growing your business? How committed are you to this? The sole prop is the easiest way to get started. And I highly recommend that you just separate your business and your personal expenses if you're just getting started, so that you're reducing your kind of lift and overhead. If you have large personal assets, you may actually want to just go ahead and put in the LLC up front to protect your personal assets. And if you're starting to work with brands, especially recommending products that could create liability for you if someone's going to sue you. Similarly, if you're creating products that people are going to use or having people in your physical space, then you may want to think about that LLC because of that liability protection. So a couple of questions for you to ask yourself as you're thinking about whether you're a sole prop or you should be an LLC. And finally, for those of you that are really feeling the momentum and the traction, if you're making more than $70,000 to $80,000 a year in profit, think about that S Corp. But until then, don't worry about it.
Hey, Sima, we have a quick question from the audience from Ashley. She asked, it seems like a DBA or doing business as has a similar structure to the sole proprietorship. Perhaps a DBA has lower fees. Would you recommend a DBA or sole proprietorship for brand new artists and creators?
So a DBA is actually oftentimes when you register with an LLC, the name that you want may not actually be available. So you'll register with a different name, but you'll just do a DBA. So honestly, like Creative Juice, we are DBA, Creative Juice. Our technical corporate name is Content Finance. So what I'd say is you don't even need to worry about a DBA unless you're registering as an LLC. You can just do business however you want as a sole prop. So the DBA, again, is just if your LLC name when you're registering with the state that you want to register in is taken and you want to use a different name to register than the one that you're doing business as. DBA is just doing business as. So I'd say don't even worry about it. Just stick with the sole prop if you don't have concerns around the liability. Just keep it simple.
Thanks, Sima.
Great. I love it. Keep sending questions, and Lizzie will keep appropriately pausing as we go through this presentation to make sure that we're getting to your questions. Okay, so now that you figured out your business structure, whether it's a sole prop or an LLC, DBA, LLC, what's the first step you do? You've got to put your income in one place. Otherwise, you're not going to have a sense of what your cash flow looks like, and we'll talk about that in a second. But as a creative and as a business person, you often have different types of income. It can be money coming from affiliate marketing relationships, brand deals, platform money, whether it's AdSense or a fund, merch if you're selling products, subscriptions if you're on Patreon or if someone's paying for certain type of content from you, and then other membership type fees. all of this can vary. And if you're keeping track of it in different places like Venmo or PayPal or Cash App, it gets confusing really quickly. I know sometimes it's easy to be like, just Venmo me, PayPal, whatever's easiest for you. But that gets to be a really burdensome mess over time. So just keep your income in one place. And if someone does Venmo you, make sure you transfer it over to one place so you know what your business income looks like overall. And with the bank account, you can make that your default payment and get all of the money directly deposited into that one place. So put your money in one place. Again, the trick here, according to the IRS, is separating your business income and expenses from your personal income and expenses. If you're doing this full time, a lot of your income is just going to be business income, and a lot of your expenses will be business related too. If you're going to dinner and you're talking business, that becomes a business expense. That's really important. Keep it separate. And on the personal side, if you've got a side business, but you still have a full-time job, your W-2 salary, like your kind of employee compensation, is personal income, and your expenses that are not related to your actual business would be in your personal bank account. So just really keep them separate and make your life a lot easier. And you get to save thousands of dollars in taxes. I kid you not. It's just really important to keep it separate. So let's kind of unpeel the onion there, or whatever that saying is, with taxes. So what do a home office, Wi-Fi, and selfie light all have in common? Throw it in the comments. Any takers? Okay, I'm giving you guys a second to chat. Right. They are business deductions. Yes, you guys got it. So how do you know if you qualify for tax write-offs? It's because you run a business. And again, we talked about what a business is. You're making a living off of it, or you have a meaningful and honest intent to make a profit from it. So if you become an LLC, the cost of running the LLC and those registration fees, those are business deductions. A space in your home, if you've got a home office, that's a business deduction. Your car, if you're using it for business purposes, a percent of that can actually be business. You save a ton of money by starting to recognize that a lot of your expenses are actually related to your business. And it's really important for you to take advantage of that. Too many folks leave money on the table that the IRS wants you to benefit from. So here's a couple more examples of expenses that you should think about as business expenses. Your cell phone bill, right? Your Wi-Fi bill, your utilities. If you're using a home office, think about your utilities at home. A percentage of that is actually going to be related to your business expenses. If your equipment, right? Your desk, your green screen, your selfie light, repairs that you're doing related to your office. There's a creator who actually put in flooring and heating and insulation into a room, which obviously increased the value of his home as well. But those were all business expenses because it's related to his home office. If you're taking out insurance, the premiums, legal fees, those become business expenses. Video equipment, like all of this becomes business expenses. Another really great example is a creator who actually went to Disneyland, and they were filming a video about being at Disneyland. It was a real piece of their content. Typically, the IRS would say, those are entertainment expenses. You can only deduct 50% of it. But because it was actually related to the content, he could deduct all of that. So think critically about what you're doing and how it's related to your content or to your business, and make sure that you're really benefiting from the tax deductions that you can get.
Hey, Sima, we have another quick question about that from Rachel. She asked, do you need to keep up with receipts to prove or record your expenses? I'm assuming. Great
question, Rachel. Here's the honest answer. Accountants will generally say that you should try to keep receipts of over $70 in case you get audited by the IRS. My personal opinion, and this is, you can consult, and it's really up to you on your risk tolerance, is that is a really antiquated rule. And it existed largely when folks were paying with things with cash, right? Because you had no electronic record of your expenses. But if you're paying with things with a credit card or a debit card, or using electronic expenses, and you have a record in your bank account of the expenses associated in the item, like that's pretty good record and would probably, in my opinion, suffice for an IRS audit. So what I really encourage folks to do is make sure that you are spending for your business out of one place. You're seeing here perfect timing, a picture of, Juice debit card. You can load in Apple or Android Pay. You can also get a physical card. You can do ACH and wires out of the account. Use your account as a place to electronically record your records. And if you're, on the more cautious side, you feel free to keep your receipts. But in general, given the electronic history that comes with statements, and to me, like the cost of keeping up with the receipts, I generally don't keep receipts. That's again my own kind of risk tolerance, and I feel comfortable showing the IRS all of my electronic expenses. Obviously, if I pay for something in cash and I'm just kind of relying on the IRS, like I would keep that receipt because otherwise there's no proof of that. But I don't really pay for things in cash, so I hope that helps.
Thanks, Sima.
And then that kind of just spoke to my point here, which is, put all your expenses in one place. It'll make your taxes so much easier to do because you'll understand where all of your expenses were. If you're audited by the IRS, it's really easy to say, look, this is my business account. These are all my business expenses. And you also get the presumption of kind of the benefit of the doubt. If there's something in there and you're really disciplined about keeping things business related, it's clear that it's more business open. So, this is an FDIC insured account. There's rewards that come with spend, and it's really easy to manage with your digital card as well as your physical card. I see a couple of tax questions here. You should definitely open business accounts for your small business. Juice works for your small business, for your creator business. You can have multiple accounts with Juice as well. You should try to think about keeping, if you have multiple businesses, separate accounts for each business so that your accounting is clean. The other question Chantel asks is, can I only write off equipment that I purchased this year? Yes. So if you're, this year's 2022, tax returns were already due for 2021. The IRS typically looks at your business income and expenses on an annualized basis, unless you elect to treat it otherwise, but typically it's your calendar year. So from Jan 1, 2022 to December 31st, 2022, you got to look at all your income. Again, keep it in one place because the more income you have, the more you can justify expenses that you're writing off of, right? It's hard to justify $10,000 of equipment on $0 of income. So you want to be thoughtful about that. And you would write off equipment that you purchased in 2022 against the income that you made in 2022. Okay, moving to the next slide. Again, just drilling this in. Business life, income and expenses go in one place. Personal life, income and expenses go in one place. This is one of the top criteria the IRS looks at when they're auditing or trying to understand if something is business or not. All right, cash flow, income in, income out. Let's talk about it. It feels very intimidating. You are a business, you've got a business account, and now you need to figure out how do you manage your income and your expenses. This is something that's really unique to business owners, this idea of cash flow. If you're just working at a job 9 to 5 and you're getting a paycheck every 2 weeks, you kind of know what your income is going to be because you're getting the same amount in your account every 2 weeks, and your expenses are typically on a cycle as well. Your utilities, your normal expenses, all of that is typical once a month, and then you kind of know what your cash flow looks like. When you're running your own business, it can be a lot more complicated because it's harder to predict. Some months are bigger than others. Some months you do brand deals. Some months you get a great corporate gig. And so that income can be a little bit more variable, while your expenses can also be variable because you can dial up or dial down the different types of editors that you might be using or travel expenses or whatnot. This is totally normal. Do not feel bad about that. I think a lot of folks feel stressed, like, wait, I don't know about my cash flow. It's totally normal to feel a little confused about it. And it's also really important to understand what your flow is and to start being able to predict and plan for that. So let's talk about what that means. When you don't have enough of that flow or that cash flow, businesses typically use tools to smooth your income. That is okay. Like, I think there's a lot of stigma around I'm using cash flow tools to help me manage my cash flow. That's not true. Like, it's smart to think about cash flow management tools so that you're always investing in your business. A couple of examples of cash flow management tools. There's debt and there's not debt. Debt, you can use a line of credit, you can use a credit card, you can get a loan, mortgage is actually a type of debt, right? Then there's not debt. You can get money paid faster to you. For example, if you have a brand deal or another kind of contract that's going to be paid out in net 30 or net 60, you can actually get that advanced for a small fee. And that's money that you get up front to help you manage your cash flow. You can just keep cash flow in your bank account. It's not always the most high ROI, but it is a simple concept. And then you can use different cash flow products that are built for creators like Juice Refresh or Juice Reserve, which I'll talk to you about in a second. So Juice Refresh is like a YouTube only, for those of you that are on YouTube, where you can get short-term funding for your content, for content that's like on the period of 3, 6, or 9 months, depending on how much money you need. Reserve is a longer-term investment that you can get to invest in your business, and you can apply for funding on a scheme of 1, 2, or 3 years, and we will underwrite across your platforms. This is most akin to what I spoke about on the earlier slide, like a line of credit or an installment loan. The idea being that we understand you as a business and what your different platform revenues look like, and we can help you get access to cash that helps you manage your cash flow or invest in your business. So here's a simple example for how to think about whether funding or cash flow management tools make sense for you. It's about the return on the dollar. So if you're paying 3% for an advance, for example, let's say you want your brand deal advanced to you, and that 3% fee gets you access to, let's say, $5,000 today that you would otherwise have had to wait for 2 months to get. And you take that $5,000 and you invest in new equipment, or you invest in a marketing campaign, and you can increase your earnings to $15,000, then that's totally worth it, because the return is much higher than the 3% that you're paying. So think about the cost of the cash flow tool that you're looking for and what that return will be if you're able to put the money to use for your business. And that way, like, every business knows this, you have to spend money to grow. You have to be able to buy that equipment. You have to be able to invest in your marketing or your editors to be able to grow. Like, think about cash flow as a tool, not as something that you need to feel sheepish about. Some ideas for what you can do to invest in your business, merchandising, product, you can hire teammates. This is really important. Think about what you can delegate and how you can leverage your own time to increase your ROI. Advice, lawyers, we had a creator who took out some funding, hired a copyright lawyer because someone was infringing on their copyright and it was taking away some of their revenue. And so that $10,000 investment on the lawyer help them get about $50,000 more. That is a good ROI on the use of dollars. Equipment, workspace, we all know the importance of studio space or good equipment like cameras to help increase the quality of your content, and hence engagement, which has ROI in terms of how people are engaging with you. And then marketing and travel and analytics. So this is just a couple of ideas for how you can think about growing your business and investing in it. And a couple of other concepts here, or examples from folks. The Maynards are awesome. Check them out. Their views went up by 3x when they started investing in their business. Similarly, Grow with Joe is a phenomenal entrepreneur and creator, and they've been able to increase the quality and community of creators that are in it with them to grow their business. So just a couple of ways to think about ROI and investing in your business. Don't be afraid of these concepts. Really try to understand what your cash flow, your income, and your expenses look like so that you can start planning ahead and thinking about, how to make your business more predictable and how to manage your growth and how to manage your life overall. One thing that we will do within Juice, if you're using Juice, is we kind of break it out for you so you see what your cash flow looks like month by month, and make it really easy for you to digest that in a visual way as well. This gets you out of spreadsheets and makes things really intuitive. So, just whatever tools you're using, if you're not using Juice, just make sure that you're not kind of blocking out these concepts. Like, really think about embracing yourself as a business and how you understand that. And appreciating that this is something that lets you make money while doing what you really enjoy. Okay, I'm going to pause there. Make sure there are no questions on cash flow management, and then we'll go to negotiations.
Hey, Sima, we actually have a couple. One from Yenny is it okay to use your invoices to demonstrate the cash flow to file taxes of 2022? Since I recently opened my business account, most of the payments went to my personal account.
Great question. What I would do is clean up those personal payments and move them into a business account. You can do a one-time transfer, just make a note of what those were, and just make sure those are your business expenses so that the accounting becomes clean. And then going forward, just use the invoices. Juice invoices are awesome, and just kind of make sure that folks are the money is going back into that business account. But try to keep it separate going forward. I think it's totally understandable to do a one-time cleanup transfer, and it's very expected as well.
Thanks, Sima. We also have another question from Tiara. They asked, for someone who is a solo freelancer or contractor, should they still open a business account, and particularly maybe with Creative Juice? And would expenses be charged from that business account?
I would say that if you're a contractor or freelancer, you probably should, because you can expense things that are related to your gig, especially if you're a contractor. And I'd also encourage you to think about, are you really a freelancer and contractor, or are you a business? If you're contracting and doing different types of work and you're negotiating with, what that is, like, you might actually just be a business yourself and a sole prop. And so you should think about yourself that way, and think about, what it means to keep all of your income in one place, separate from your other income that you might be getting. And also think about what your expenses are for actually being able to do that contracting type work. For example, I treat consultants as businesses. If you're a consultant and you're a one-person consulting shop, you're running your own business. That's how you're making your livelihood. And there are expenses that go with being a consultant, like your computer and your Wi-Fi, very similar to what a creator might use. So I would definitely encourage you to think about setting up a business account and keeping your expenses separate, because you'll be able to deduct as well.
Thanks, Sima. And one last one before I let you dive into negotiating is from Gabby. Gabby asked, if you're keeping your business and personal income separate, how do you pay yourself to live? Just transfer the money over like a direct deposit, or are there any rules of thumb that could help?
That is a great question. I would, on a monthly basis, transfer over to your personal account what you need to live for things that are definitely not business expenses. So first, let's talk about hybrid expenses. If you're in a home office, for example, then I would pay my utilities out of my business bank account. And at the end of the year, when you're preparing for your taxes, I'd probably do like a rule of thumb and say something like 20% of those utilities are business and 80% is personal, or whatever the right percentage breakdown feels. Similar with your car, where it might be a hybrid expense. Some of it is for your business and some of it is for your personal use. I think about putting that in your business account, just making it standard. And then, at the end of the year, when you're filing your taxes, taking whatever expenses were there and putting a split on it so that you're honest with the IRS as best as you can. Typically you'll see 60-40 splits or something like that. When you're a sole prop or an LLC and you file it, your expenses, the IRS isn't going to treat that differently. They'll actually just treat you with one return. What's cool about that is you're not double taxed. You're just treated like that's your income. But the reason why you kind of separate it out and put the stuff that you need to live with into a personal account is that it just keeps accounting clean. So if you're making, let's say, $100,000 in a year, and you're throughout the year transferring, $25,000 for your personal expenses, you'll just know that those are personal transfers out, and they should not be treated as business expenses. And all of the expenses that you then make out of that personal account, are just totally separate and not used as deductions on your tax return.
Thank you so much.
Cool. Okay, we're focused on negotiations now. Not every brand deal that comes to you, or not every opportunity to make money, is a fit. And that's okay. I think it's really tempting when you have an opportunity to be like, I want to do this. I want to make this money. I want this to work. Sometimes it's just not worth it. And I think it's really important to know who you are and what your values are and where you want to be as a business, and recognize that some things will just be a little distracting and it's just not worth doing. So focus on fit in every negotiation and opportunities where you really feel like there's going to be a win-win. So how do you know if it's a fit? Well, one, are your skills as a creative or as a creator, is your audience going to be a fan of the brand? You want to be genuine in whatever you're working with. Second, does it fit your niche? Does it fit your skill set and like the type of stuff that you like doing? If it doesn't, then you're probably just going to come across as inauthentic and not excited about it. So be really thoughtful about whether it really plays to your strengths. And then finally, do you believe in the company or the brand and the products and values? Or, like, is it something that just doesn't feel good to do? If you're a creative and you're being asked to do some work for, I don't know, I'm going to pick on crypto, like a crypto company, and you don't really believe in crypto, then you don't want to do that because it doesn't like jive with your belief systems, and that'll be apparent in your work. So really think about the values that the company is bringing and also like what brings you joy, and make sure that that's a good match because it'll come across in your work or in your content. And, if you've got fans and an audience, then that will be really apparent too and can ultimately affect your own brand. Okay, how do you reach out to a brand? Well, first, note that I talked about reaching out to a brand or a company that you'd want to do work for. I think a lot of times we expect folks to reach out to us because we're obviously, all of you are incredibly talented folks. They've got your portfolio and maybe you're listed on creatively, but sometimes you can actually just reach out to a brand that you're excited about that you think could be a really good fit. Just slide into their DMs. And first impressions matter. For some of you that are in the creator space, or even if you're got a portfolio on the creative slice, make sure that your first impressions matter. Put together your media kit. If you're a creator, Juice will do this for you. If you're, on the more creative side with like kind of portfolios, make sure that's in good shape. Even if you have a reputation and someone knows you, anchor them in that reputation. Make sure you have your stuff together. And first impressions matter. So always put your best foot forward. And then you get an offer, you land this deal. Now what? It's time to negotiate that. A couple of things to think about as you think about your value and your worth is how engaged is your audience and how aligned are your incentives if you're post as a creator or if you're doing something on the more creative side. Like, what does success look like? And how do you align incentives to make sure that you're both rewarded when there's really great success? This is a nice way to think about a negotiation. I think a lot of times negotiations are tit for tat, right? People see a pie, like a pizza pie, and they're like, how many slices can I get? And I want to get more slices than you. Or if you get a slice, it means it's one less slice for me. I like to kind of push the thinking on the negotiation and say, it's not just about the pizza. It's more than that. It's about the Coke and the salad that comes with it and all of this different stuff. And let's try to figure out how do we make the pie bigger versus fighting over the pie. So when you think about the deliverables, add or remove deliverables that you and the brand can reach an agreement that works for both of you. It's not just about what's in front of you. If you're finding yourself at an impasse, break out of that mindset and think about the other pieces to the deal that can start to get incentives aligned. So a couple of things that you can keep an eye out for that can kind of increase the scope of the discussion and make it broader than just that pizza and the different slices that you're fighting about. Think about how the content is used, whether it's a graphic or whether it's content, like how long are they able to use it for? What are they able to use it for? Are they able to put it on their website in perpetuity? Is it for a certain purpose? Like think about the usage rights associated. Second, think about exclusivity. If they're going to use your content, are they exclusively using your content? Are you not allowed to create content for a competing brand or do you work in a similar style? Like if they're asking for more of you, then make sure you're charging for that. Your creative licenses, your freedoms, those are valuable. So don't let them just limit you without being compensated for that. Deadlines, make sure those are clear. If they want things done faster, then you feel comfortable. Make sure you're charging for that. And make sure the payout terms are really clear. Like, is it net 30? Is it net 90? And are there late fees associated if they're paying you late? Really think about that because we know how often creators and creatives just kind of get stuck waiting for deals all the time. And that's not fun to not be able to have control over that cash flow. We talked about that cash flow already. So just make sure that payout terms are really clear. And another one that we often see is revisions. A brand will come back to you and say, but, can you tweak this? And then, can you tweak that? And like, wait a minute, all of a sudden it's turned into a lot more work than you expected. So just make sure it's really clear up front what that deadline is, how many revisions they get, and that you're being compensated for anything beyond what you expect to be within the scope of the work. And a little plug, sign up for Juice News at the bottom of our website. We like to include different tidbits and tips like this in general. And we'll also send you a free brand contract if you want one, that we recommend folks make sure that they're cementing so that all of this stuff is really clear and the concepts are outlined in that contract. Okay, the bottom line, you just got to know your worth. Like, y'all are valuable. Like, the creative spirit is incredible. Not everyone's got it. So just make sure that you know what you're worth. I like to joke that, you know, the last decade was about the engineer and code, and the next decade is like no code and all about the creative. So just know that you are valuable. The work that you're producing is valuable, and that you should feel confident negotiating for your worth. Okay, I'm going to pause here for a second and see if there are any more questions. Otherwise, I'll jump into a little bit more of the tooling.
Hey, Sima, we have a couple questions, but I'm happy to save them towards the end because I think they're a little bit more in depth, but we'd love to hear why Creative Juice is so incredible, and then we can dive into the Q&A portion.
Okay, that sounds great. So look, you all are running your own businesses. You're, you know, embracing the creative spirit and you're monetizing off of it. And for a long time, I think that was not treated with the respect that it deserves. And for a lot of creators and creatives, opening a business bank account was actually really hard. You'd have to go into a branch and sit there for like 2 hours and answer all their questions about what you're doing to be able to open a business bank account. It shouldn't be that hard. You should be able to open it online really easily and get access to tools to help you run your business. And that's really why Juice is different. We get it. We want to help you succeed and be able to do all of that and kind of grow your ambitions. So what do you get with Juice? You know, with traditional banks, maybe you'll get a QuickBooks compatible account, but all the other stuff like digital first, probably not going to get that. You're going to watch out for this. You'll get monthly fees or minimums. For example, at Chase, if you don't have at least $2,000 in your account, you will be charged $30 in that month. That's not fun. You can also be charged a lot on your invoicing. We're doing that for free. And we're also offering you funding tools. A lot of times folks ask, well, how are you making money then? Well, the reality is today we make money off of the funding options that we give our creators. You make money when you spend on your debit card. It's something called interchange. And over time, but not yet, we will be charging for different tiers of service as we grow and get more mature. But today, you know, we're proud to be able to do all of that for free and for, you know, helping creators run their business in a really stress-free and easy way. One last thing, we also want to reward you when you are with Juice. So this is Juice Bucks, our referral program, and we help you get paid. So basically, when you sign up, you will get a referral page and, you know, a little site that shows you all of this in your account. And if you refer up to 100 successful folks, then we'll give you $10,000. So if it's just one person, you get 25, they get 25. It's pretty standard. We're excited to be able to refer and reward people for referring. If you get 10, we'll drop a $10,000 or $1,000 bonus in your account. And we're really excited. Yesterday, Mr. Humanity, who is a creator on Twitter and on Instagram, referred over 10 people to us and received a $1,000 bonus. And we're just excited to see who will be the first $10,000 person. But more importantly, the reason why we're doing this is because we believe word of mouth is really important. And we want to be building a product that folks really love and want to tell their friends about, and we want to reward that. So this is really us putting our money where our mouths are, and we're really excited to just be building this community of creative people who are building a livelihood and, you know, meaningful earnings from things that they're passionate and enjoy doing.
Amazing. Thank you so much, Sima. We dropped in all of Creative Juice's handles and website. Obviously, check them out on Creatively, but peep that in the chat for sure. And we have so many more amazing questions, but I'll pick some of, I think, the ones that most of you will have in the limited time that we have left. But Sima, this was so incredible. I know I personally learned a lot, so thank you so much. One of our questions that we received from our social feed is one regarding the current, I guess you could say, economic landscape. So with a recession looming, what advice can you offer to creatives about the future trajectory of the creator economy?
Yeah, that's a really great question. And, you know, the short answer is nobody really knows what's going to happen. My answer is I'm pretty long on the creator economy. I think with the recession looming, consumer spending is going to go down, and that means that folks are going to be at home more, and they're going to be looking at content online or doing different types of things to entertain themselves at home, whether it's gaming or other types of activities there. I also think that just more broadly, with folks being at home, the opportunity to just buy online and do different things that are more bespoke to them will continue to just grow and change. So I'm pretty long in that creator economy and the idea of user-generated content and folks entertaining each other through these different online communities. But what I would say is, to anyone, like, be frugal, right? As a company ourselves, with the recession coming, we're being thoughtful about how we spend our money. We're lean on hiring, and we're just being really, careful, because we want to make sure that we can take care of the people that we have. So long on the creator economy, I'm long on creatives, I'm long on creators, but I'd also say just, no one knows what this is going to look like. So just be thoughtful about how you grow and make sure that you're keeping a good cash flow. And if you can get capital, kind of going back to your cash flow discussion there, for a good price, think about holding a little bit of a cash reserve in case things get a little bit rocky.
Thanks, Sima. I think kind of related is a question we received from Kyle, which I think is an interesting one. It's since retirement plans aren't typically, quote, a thing sometimes for creatives, what do you suggest as a starting point to make sure that they are saving appropriately for their futures? For example, is there a recommended percentage of income that you suggest be saved monthly for the future?
That is a really great question. Look, I think it's also a function of your age, right? So if you're in your 20s, you're getting started, I'd probably be less focused on it quite right now. But as you head into your 30s and you start making more money, I'd be thinking about what the right appropriate percentage is and the right structure is. So if you're in an S Corp structure, that means you're making more than $80,000 a year in profit. You should be thinking about setting up something called a SEP IRA, SEP IRA. You're probably, if you're in an S Corp structure, already working with an accountant, so just flag that for them that you want to start setting up a retirement account in a SEP IRA, and it's pretty tax advantaged. If you are in a lower tax bracket, something that you should think about is a Roth IRA. I think the contribution limit every year is about $2,000. And so it's less about kind of the percentage there, but just really getting in a practice setting a little bit aside. Especially as you're just starting out and if your income's low, the Roth IRA is very tax advantaged for you because it taxes you at the current tax rate versus, hopefully as you continue to grow your business, you'll make more money and be in a higher tax bracket. But thinking about setting stuff aside is really smart. I'd say, especially as you get older, be more focused on it. But in your early days, I'd say kind of be more focused on growing your business and investing in yourself. And thinking about that Roth IRA as a $2,000 pocket and kind of graduating into more sophisticated strategies as you have more free cash flow to be investing into your retirement.
Thanks, Sima. We just got the question in from Mehdi, who just wanted some clarification on Juice. They asked, so is Juice a type of bank for only creator work, or is it also a card like Apple Pay?
Great question, Mehdi. So Juice is a business bank, and with the business bank account, if you get cards for spend, like a debit card, and that can be loaded into your Apple Pay or Android Pay, or you can also request physical cards that you can use in person. So it's a bank. You can use it. We built it for creators or creative people. If you're a small business and you want to use it, you can definitely use it as well. Although our focus is really on helping that solo business owner who's creative be able to have a bank that understands what they do and can support them in their workflows, so that you're not trying to figure it all out, a bank account and then QuickBooks and then FreshBooks and then something else. It's all just in one place to make it really easy on you.
Thanks, Sima. And we have two last questions for you. One is from Brooke, and she asked, what gave you the idea to start a banking solution for creators in the first place?
Yeah, I never thought I'd start a banking solution. And the reason I did was because when I started talking to a lot of creators, I started realizing how many of them don't have business accounts. A lot of folks are in PayPal or in Venmo or in Cash App or a mix. And a lot of them are commingling their business with their personal expenses. And it's kind of a hot mess. And when it comes to taxes, they're not taking advantage of the taxes and the deductions that they should be able to get advantage from, which means they're leaving thousands of dollars on the table. And they're really intimidated by walking into a bank and trying to get an account. And those accounts can be kind of costly with the minimums and just the time suck that it takes. So I saw a big opportunity to fill an unmet need. And I am so long in the creator economy. I think that it's going to grow and that more and more people are going to have side hustles or side businesses that are them expressing their creative output into the world. And all of those people, should be able to have business accounts that work for them. And that's really the vision that we're trying to fill.
Amazing. Our last question for you, Sima, before we wrap up is what's next for Creative Juice? What's on the horizon or any big exciting projects coming up?
Well, stay tuned in November. We will be launching a couple more funding products, especially for those of you on YouTube. And later this year, we know a lot of folks hire contractors to help them grow their business. And there's a lot of tax rules around that, especially reporting and reporting. And we wanted to build a really integrated way for you to do that through your bank account so that you don't have to stress about that and, worry about getting audited by the IRS. So we're going to be building some more embedded features there. So stay tuned for a couple of those things. And next year, one of the biggest things that we want to do is just making it easier for you to manage your taxes overall. We know it can be really stressful, and we want you to not have to stress about being a business. It's hard enough making money and following your creative passions that this stuff should not be as hard as it is. So stay tuned for more. And we'd love to have you be on that journey with us. So sign up for Juice, get your referral code for other folks. And I think one of the benefits of being with us right now is you really get to help us define the product and give us feedback and really get great service. So, yeah.
Thank you so much, Sima. Thank you all also for attending. So many thoughtful questions, and the chat was definitely exciting. Any last words, Sima, before we let you go?
I'll just say thank you guys. All of you for your time. The fact that you're here means a lot. It means that you're thinking about yourself like a business and you're investing in yourself and in your business. So that makes me really excited because I want to see all of you succeed and reach all of your dreams. I hope that we'll see you, in the Juice community at some point soon. And please sign up for one of our newsletters and reach out to us, hi@getjuice.com, and follow us on our socials. We'd love to hear from you.
Amazing. Thank you, Sima. And yes, we have dropped in all of Juice's contact and website. So many kind words in the chat right now. Thank you guys. We'll go ahead and let you go, Sima, but thanks everyone again. We'll talk soon.
Awesome. Thanks so much, everyone.